UEM's NAV total return declined by 4.4% in March, a resilient performance strongly outperforming the MSCI Emerging Markets Total Return Index, which was down by 11.5% in sterling terms. For the year end to 31st of March 2026, UEM's NAV total return was also strong at 25.9%, broadly in line with a 26.5% gain in the MSCI EM Index, but achieved with much lower volatility. In March, markets reacted negatively to the increased escalation in geopolitical tensions, with the US-Israeli strikes on Iran and Iran's strikes on its neighbours and shipping in the Persian Gulf. These attacks have pressured global energy prices, fueled renewed inflationary concerns, interest rate expectations, and global growth prospects. Asian net energy importing countries were hit the hardest. The Indonesian market was down 14.4%, India's Nifty 50 index was down 11.3%, the Vietnamese market down 10.9%, and the Philippine market down 10%. Korean market, though, was declined by 19.1%, although remains up 19.9% for the first quarter of 2026. Meanwhile, the US S&P 500 index fell 5.1%, and the US dollar regained strength during the month, supported by its safe haven demand due to higher oil prices being US dollar denominated, which negatively impacted several EM currencies. China was relatively better positioned thanks to its ties with Iran, renewable energy capacity and large oil reserves, though its market still fell, with the Shanghai down 6.5% and the Hang Seng down 6.9%. In contrast, Latin American markets were more resilient. The Brazilian market dipped slightly by 0.7% as the central bank finally cut rates, whilst Mexico fell 3.9% and the Argentinian market surged 13.5%. Portfolio-wise, well, UEM has limited direct exposure to the Middle East, but remains cautious about broader global impacts from prolonged disruptions to oil supplies and shipping, particularly on their impact on inflation and interest rates. The portfolio is largely positioned in relatively defensive names with inflation protection and modest gearing, but during the month some adjustments were made to the portfolio. 3 changes were made to the top 30 holdings, with transport-related stocks TAV, Motiva and Azures being replaced by Energisa Energy, the largest power distribution company in Turkey, GGS Holdings, a Chinese data centre owner, and Unami, which formerly held the electricity distribution concession in Uganda. In March, there were 4 stocks which increased by more than 5%. Celsius rose 7.5% after announcing a share buyback programme. Anhui Expressway gained 6.8% on solid quarterly results and a dividend increase. Energisa Energy climbed 6.6% on strong 4Q25 results. And Capel was up 5.3% after successfully participating in the 2026 reserve capacity auction. 5 stocks fell more than 10% during the month. CTP and Sunny Vision both declined 19.8% due to macroeconomic outlook concerns around inflation and interest rates. FPT and Tailink declined amid weak sentiment toward the IT sector, despite both having solid results, whilst Kinks fell 15.7% also, despite announcing a new data centre development partnership. UEM's share price ended the month at 271 pence, down 8.4%, with a discount to NAV increasing to 13.6%. During the month, the third quarterly interim dividend of 2.42 pence per share was paid, and UEM continued to buy back shares. For more details, please do read UEM's March fact sheet, which is available on the website at uemtrust.co.uk.